Michelle, I'll start with you as the host country. Not to put you on the spot, but we just want to understand Rwanda has been at the forefront of innovation as well as creating a conducive environment for investments. What has worked well in building confidence, would you say, among investors within the sports ecosystem as well as also the larger cultural and creative industries?
First of all, good morning. Good afternoon, everyone. I think it's still morning. Thank you, Fiona, and good morning to the panelists as well. I love that we're jumping straight into the questions. I think when it comes to investors, there's really, across different segments of verticals, all investors are looking for a place or ecosystems where their capital feels safe and it's scalable, right? And so when we talk about specifically now about the creative arts and the sports, there's a few pillars or elements that you need to put in place as a government to inspire that confidence. And I think we've seen Rwanda do that in various ways where, when it comes to policy, for example, we have the Ministry of Sport that has, sector-wide policy when it comes to sports, creative industry that's embedded within our Vision 2050, which is a strong signal that this is not just, we're not taking this as a cultural asset, but it's really a viable investment area that we want to pursue. And that's something that inspires confidence to investors. Another thing is, as a country, when we place a strategic bet in terms of strategic partnerships, for example, when we collaborate with Arsenal, the likes of PSG, I think that's also a big statement where we're saying, look, we're playing in the big leagues. And we really mean business when we look at this sports industry. We think that there's potential, and we're de-risking it, if you will, in a way by being the first mover into this sector. Another element, when you see us hosting, there's a lot of events hosted here that speak particularly to the sports and creative sector. For instance, BAL, hosting the Basketball Africa League. You have Tour du Rwanda, you have Kigali Fashion Week. I think there's a number of events really that here send a message of capacity, of ambition, but also readiness, right? And this is, as the government, a stance that we're taking in saying, look, these are not, the sports and creative sector are not just cultural assets. That speaks to the safety of the capital from the investor's perspective. Now, when we think about scalability, I think there's no question about the creative industry in Africa. The demand is there, we have the population, 1.4 billion and 70% is below the age of 30. There's a rise in disposable incomes, our fashion, our music, there's Nollywood, Afrobeats. This is now a global phenomenon. And I think that's also shifted the cultural mindsets for our parents. If you're taught to grow up to become an engineer or to become a doctor, but now I think we're starting to see that sports and arts and music is a viable path, one from the parents and cultural perspective. But also here, in terms of scalability, I think you need to be able to turn that raw talent into creators that are consistently building so that you can generate the revenue. And through the programs that we've put in place, through the government, that's now part of the curriculum that we've put in place through the National Employment Program, that's also one strong signal that we're sending, that you send to an investor when you're trying to attract capital into these sectors. So I think, for me, when I think about investments, those are the two things that I always come back to. Does this sector feel safe in terms of, from an investor's perspective, bringing in capital? Do they see the potential in the market? Is there potential for scalability? And on the government side, I think we've done a number of things to show that this is viable, your capital is safe here, and there's talent that's growing and churning and turning this into a viable sector. Thank you.
Building confidence and trust in doing business in Rwanda. Emmanuel, I want you to also tap into your previous experiences, looking at the private sector, looking at even private equity. When Michelle speaks of demand being there, but from an investor perspective, you're looking at your numbers. Will I really make return? So what makes sports and creative industries attractive for capital deployment?
No, thank you so much. So picking up from where she left it, this is a sector that, the potential, we always speak of potential. However, we're beginning to see it right before our eyes. But before I get there, I think it's important to introduce my organization and what we're also doing on the continent in this respect. I work for FEDA, which is a Fund for Export Development in Africa. And this is the impact investment platform of Afreximbank, which has been a strong supporter of this initiative, BAL, over the years. Afreximbank established FEDA as the impact investment platform, basically looking at multiple sectors that are of high impact on the continent. There are three principal objectives. First is to grow intra-African trade. Secondly, to grow value-added export from Africa to the rest of the world. Thirdly is to grow industrialization. But interestingly, within these three themes, sports. And of course, the creative sector is very well embedded because we also have specific initiatives that are targeted at sports. So for Africa, I think before one can even speak about, why is this sector attractive, it's important to look at Africa and what features does exist on the continent. So if you look at Africa, we have a number of things going for us. We have what you may call the demographic dividend or the demographic edge. So looking at Africa, it's being projected that by 2050, you have 25% of the global population resident in Africa. What's even more interesting is the fact that within that 25%, we would have 1 out of 3 youth globally sitting right in Africa. And what's the implication of this? Now let's look at the supply side. Supply side means, therefore, that there's a solid pool of talent that is going to reside within Africa. We're already seeing that today with the continent contributing over 10% of the players in the Premiership League of England. And then we also look at the demand side. What does that mean? This is huge potential demand for sports content, for creative content on the continent. And then speaking about why is this, a compelling sector for investment. When you're thinking about investment, you think about how to get into opportunities before they even become obvious. So where we are today is really, a solid opportunity for capital to come into Africa and be deployed. Number one, we have, sports sector being, assets within the sector being significantly undervalued and under-commercialized. So if you're looking at the value streams within the sports sector and the creative sector, you find that these are sectors that if you invest in the leagues, if you invest in the brands, if you invest in the teams or music catalogs, they have potential to continue to earn revenues, from streaming over the years into the decades. Secondly, we have a sector where we're only contributing as sports to the total global GDP in Africa at about 0.5%. When you compare that to the global equivalent for developed economies at 2%, you find that we're yet to scratch the surface. Thirdly, we also find that within Africa, the contribution of that sector to global economy from the creative perspective has been projected to get to about 10%, and that would translate to about $200 billion in terms of value. So this is an opportunity for investors to get in. We believe that the timing is now because this is where to invest and then you ride the growth that we are seeing in the continent. Thank you.
The time is now. We're seeing the potential is there. When you're making a business point, when you're trying to get investment to come into the infrastructure here within the African continent, how is that conversation? Like even looking at the portfolio for QA Venue Solutions, how do you make that a business case?
Yeah, thank you, Fiona. Thank you for the opportunity. I think it's amazing to hear Emmanuel say that this industry is going to progress to 200 billion. You know, it really speaks to the opportunity that's available. But, you know, as it relates to the infrastructure, I think it's very easy to see that the major infrastructure is still very much driven from a government perspective. But what that does do is it provides the opportunity for the ecosystem to be created. And I think that's been the missing piece for the longest time, because if you look across the continent, you've got infrastructure all over the place. You know, I could honestly list 20 arenas that are all over the continent, but they've never been acknowledged as assets, as economic drivers. They're facilities. They host basketball games every now and then. You know, they host different federations, but the ecosystem around them has never been activated. And I think from our side as QA, we were very fortunate in being able to team up with the government of Rwanda to showcase what is possible. You know, to take over an arena that's been built by a government, because it's not easy to offload, you know, $100 million plus into an arena, just because the model still has a long way to go to justify that. But what you are starting to see is the data that comes off the back of these arenas is massive. You know, we look at the past 4 years, I think we're in excess of $50 million in terms of impact. We did an assessment of the jobs that we created last year across permanent and part-time. It's up at 16,000 jobs. That fulfills the need from a government perspective. And I think if we start to segment our approaches and say, who can build a $100 million arena and solve for their problems? And that is through the job creation. It's through the ecosystem development. We can then progress ourselves rapidly in ensuring that we have the right infrastructure built to then activate the ecosystem around it. And I think to the point Michelle was making earlier about safe investments, you know, if we want to look at arenas being a safe investment or stadiums being a safe investment, they cannot live in isolation. They have to be developed with the ecosystem around them so that the foot traffic that comes into that space, you know, if we're pushing 1 million people a year through the doors, it doesn't help us just taking the $10, $20 in the arena. You've got to also look at the $30, $40 that can be spent in and around the arena at the same time. So there's some of the groundwork has been put in place. I always commend the government of Rwanda, because for all of us sitting in this room, to be honest, they've provided a platform for us to showcase an industry that is possible, right? And if we can pull these sort of numbers in this market, imagine if we do have 3, 4, 5 arenas across the continent. You know, we'll easily get to the 200 billion and surpass that. So yeah, I think just from an infrastructure perspective, there's different ways to look at it. That touches the major infrastructure, and there's a lot more that we have to do to also build the ecosystem around it.
It's a collaborative approach, and we just want to looking at even the role of governments when we're talking about bringing in investments. We also have to create a conducive environment. So how do we make sure that national strategies really align with the vision of that we have for the cultural and creative industries? Maybe in the case of Rwanda, how are we doing that?
In the case of Rwanda, we're guided by our Vision 2050. And the Vision 2050 has, you know, spills down into the National Strategic Transformation Plan, which is NST2 currently. Then NST2 now cascades down into sectoral strategic plans. And as I mentioned earlier, the Ministry of Sports and Culture currently has a sector policy for the sports and creative industry. And I think when we talk about sports and creative sectors across the continent, we have to think about it not just as part of an agenda during events, but really mainstream them as growth sectors within the vision of the country, within the sector, the sectoral plans and strategies, which is what the government of Rwanda has done. And once you do that, I think the next step is to integrate sports and culture in the different curriculum. For example, you integrate them into education, integrate it into, back to the point Kyle was making, it's not just about the people that walk into the arena, but it's also around us. So integrating that within our urban planning, within our tourism, within our innovation strategies, so that we approach it from not a siloed approach, but really integrated approach within our vision. And what you're starting to see, at least in Rwanda, is the cross-sectoral integration. When we think about tourism, for example, and MICE, you're starting to see a lot of the events not just being about business events, but also, creative industry events, sports events. Exhibit A, I think BAL is a great example of that. And this is really intentional because it has been embedded within the national strategies. When we talk about education, that means that we need to look at curriculums and make sure that we have skill and talent development programs that are embedded within our strategies, which is what creates job pathways into fashion, into music, into arts. And all this has to be intentionally added into the strategies and the agenda. Earlier also mentioned, I touched on urban planning. I think you're starting to see around Kigali that there's spaces that are for recreational purposes. And it starts with small activities as such, where you plant that seed in people's mind that culture and recreational activities that spur that creativity are important in our spaces. You also, I'll take an example of the Kigali Green City, for example, where in the master plan, I know that there was areas that are specific for, the arts, the music, platforms where you can start to churn that raw talent into a very trained talent that can produce, let's say, music, that can produce shows that start generating revenue. So in the case of Rwanda, I think we've been intentional from the get-go to embed this within our sectors that we know that will contribute to the economic development. And those are just a few examples, just to give you an idea of how now it's starting to cross-cut across different segments, be it in tourism, be it in our urban planning, and that's I think really how you unlock the potential of these sectors.
And unlocking the potential also comes with rethinking financing models. So how do we rethink finance when it comes to that? How do we move from traditional financing means to looking at innovative financing models that we have presently? How can we tap into these emerging tools? Maybe Emmanuel, you can take us through that.
Thank you so much, Fiona. When we're thinking about financing, it's important to have a value chain approach to dealing with this. By value chain, what I mean is you're looking at upstream versus downstream. And for upstream, we're looking at investment in assets, for example, tangible assets specifically, for example, arenas, stadium, training centers, studios. Investing in that, you find that when you invest in those, because those are tangible and those are assets that you can actually use to seek to raise debt. So they're basically available as collateral. So that's where to start from. When you also invest in the upstream, it also have impact on the downstream, because when the facilities are there, then the talents can be groomed. But more specifically, speaking about financing models that you can deploy that are non-traditional, the way I would think about this are in a number of ways. First, I think about PPPs. The reason being the government is there, the government can provide concessions, government can provide land, and then the private sector comes in to then provide equity or debt, or both, to be able to finance those projects that are related to the upstream. Additionally, you could think about blended finance. And why blended finance? Blended finance because you'll be utilizing concessional funding, which are typically priced in a way that is affordable. You mix that with commercial funding, that will bring the cost of funding down and make that affordable. You also have IP-backed financing, where you can actually use the intellectual property behind music behind films, behind sports, to be able to use them as collateral to seek financing into the space. So what have we done as Afro-Exim Bank and also FEDA? And by the way, Afro-Exim Bank has committed $1 billion to FEDA, out of which FEDA is investing across a number of value chains. We've established an entity called Canex Incorporated. Canex is an initiative of the bank that looks to invest across a number of instruments within the creative sector. It has already financed a firm that is called Mugwangi, and that firm has been developed a story to tell the story of Dr. Dennis Mukwege, who is a Nobel Prize winner from the Congo. So that's a story that will motivate and help grow the sector. That's an example of what we've done. We've also financed a number of other projects utilizing debt in the bank. And for also to support sports specifically, we financed a project that we are bringing to Africa for the first time, and that is going to happen in the course of this year, and that is in electric boats. We backed Team Drogba. This is one where you have celebrity-backed model where you are basically raising teams and attracting funding. So there's a number of creative ways to support the sector, and we see that increasingly having an institution like Afro-Exim Bank who is able to think outside of the box and able to approach the space and be able to de-risk and put initial capital to create value and then attract other funding into the space subsequently. So that's something we've done to date. Thank you.
Before we even take the last round of questions, I want to open the floor. If we could have just two questions, and then, okay, we have a hand there and another hand there. Okay, perfect. Could you both stand so that the protocol team could be able to hand you the microphone? So we'll start with you, and then you'll ask your question as well.
Okay, thank you. It's Christian again, representing the EMEA Academy. We're based in Florida. I got one question, but I'm going to split it in two, to Emmanuel and Mrs. Michelle. Do we place too much emphasis on financial return on investment when evaluating private investment in sports? And should we instead prioritize social impact metrics like youth empowerment, gender equality, and community transformation? That's for Emmanuel. And I'll just ask the second one. Why does it seem easier for African sports organizations to attract diaspora investors than local ones? And what does this say about the perception of sports as an investment opportunity within Africa itself?
Second question.
Yeah, over there.
Okay.
That's the second question.
Okay. Perfect.
All right. Yeah, thank you so much.
Let's get the other question, and then we'll take the round.
Thank you. Good afternoon. My name is Dilla. I'm an artist, and I performed at the BAL opening ceremony on Saturday. Thank you. I'm also a creative entrepreneur inspired by the growing synergy between the arts and the sports sectors. We're seeing examples like African artist Thames joining the ownership of San Diego FC, which is exciting. What are some practical steps to move beyond visibility and into shared ownership in the private sector, sponsorship for our community building projects, and leadership pipelines for creatives within the sports ecosystem across Africa? Thank you.
Okay, who'll take that? Kyle? Okay, perfect. We can start with Emmanuel, Kyle, and then we'll close with...
Yeah. Thank you. I think the question of impact versus returns is a really important question. And recall I said that FEDA is an impact investment platform. And the reason that is so is that, capital globally look for home for returns. So that's where people typically start from. However, when you have an institution like Afro-Exim Bank that is owned by 54 African countries and private sector investors, including Rwanda as a government as well, you find that we are best positioned to be able to speak to impact. So we typically start our appraisals from impact before we get into returns. And I can relate with that because I came from the private sector where we always spoke about returns first before impact. So for us, it's really impact, is really looking at sectors where capital is not willing and ready to go to, but we're able to intervene, de-risk such because of the nature of our institution and the rights, the privileges that we have across the continent. We are able to intervene, and that is exactly what we are doing. For example, we recently announced a $1 billion Africa Femme Fund. The whole idea is to be able to utilize that to support the movie sector, to build infrastructure, support talent, and also promote content. And part of this is also to be able to control the narratives and tell the African story to the world because we haven't told our story enough. So for us, it's about impact before we get to returns. Thank you.
Kyle?
Yeah, great. To answer the question just around the sort of integration, and partnerships, one thing that we've driven as a business, and I speak of this also broadly across the industry, is just being very purposeful about collaboration, understanding that as an industry, we might not be, sort of well-resourced. And so for us, it's really starting to understand what value can we bring together as a partnership to unlock further funding, further resources to grow ourselves. And I think the point you made around Thames joining a team, how do we bring that into the continent, understanding that value might not be in the traditional resource, but being able to strategically come together to unlock additional. And it really speaks to the major institutions such as BAL coming into the market, is what does that look like? How can we quantify it and make it happen so that people get the opportunity to maybe be a part of teams to some extent, also be able to access venues. I now want to switch to what we do. We realized coming into the market, and it happens in a lot of the markets, is that some of the promoters, some of the artists don't necessarily have the funding available to host a major event. They have an amazing craft, they have an amazing ability. And so for us, it was how do we lower the hurdle in allowing people to access the space and perform their craft so that they themselves can go on to grow. Because the more we grow that ecosystem, the better it is for everybody. And so one of the examples I'll use is the naming rights that we did for what was the Kigali Arena, now the BK Arena. The Bank of Kigali took on the opportunity. It still sits as one of the largest naming rights deals on the continent. And we took 80% of that naming right value and we put it straight back into the market. And what that meant is that promoters that maybe yesterday could not access our venue now have an ability to come in and perform their shows. Federations are able to take advantage of the funding that's available. And it's creating really unique partnerships that over time tend to then go on and become their own businesses. It's established real businesses out of the arena as an example. And that's because we were very purposeful of pushing partnership, understanding that not every deal that is done needs to have a financial component at the base of it. There's also other value that we can bring to the table to move things forward.
Okay.
To the question about diaspora, I think it was diaspora versus local investors into this industry. I think there could be a number of elements why that is the case. And if I had to pick maybe a few, I would think that it might be related to capital, access to capital in the countries that our diaspora is in. In most cases, you find that it's cheaper. The cost of capital is nowhere near close to the cost of capital in our markets. It could also be tied to the high propensity of to spend in those from the incomes in those markets. So I don't think it's really related to negative perception from our local investors. I think I sense that was that's what you implied. I think it might just have to do with structural hurdles in place in terms of access to capital, in terms of ease of finding that capital. So I would assume that those are some of the few constraints that the local investors might face looking to invest in a sector or sectors that might be deemed risky.